Good morning. Let's get the chat box going here. All right. I think I'm almost set up here. Good morning or good afternoon, depending on your point of view. We're gonna get started here in about 3 minutes. You should just see on your screen in the background the NinjaTrader trading platform. In the foreground, the NinjaTrader top 5 indicators kind of cover sheet. Uncle Tone, sup? Good day to all. Good day to all. Uncle Tone, thanks for being here. We're going to get started right on time, guys. 2 minutes. It's 11:58 East Coast time, 10:58 Central time. And I don't know what time it would be in Europe. It'd be later, I'm sure. 6 hours, 7 hours, 8 hours later, maybe. Tennessee point of view. So that's East Coast, right? What part of Tennessee, Uncle Tone? Drop in a note. We will get started. Thanks for the thumbs up already. We haven't even started yet. We're getting some thumbs up. I like it. All right. So hopefully whatever type of format you're using, whether you're here with Zoom, YouTube, or Facebook, feel free to type in questions. Sam, good morning. Good to see Sam here today from Facebook. Yeah, so Sam, unfortunately, because these are Zoom-driven events, I can't see the Facebook comments. I could only see YouTube and Zoom comments, but my trusty sidekick, Isabella, will cut and paste stuff for me, and I should see it as we go. Humble mentor from Florida. Uncle Tone from Johnson City, Northeast Tennessee. Diego's here. Oh, we have somebody from Venezuela. Argerito, did I say that right? Hey, Terrence, how are you? Good to see you again. Terrence is from Seattle, raised Seattle. It's 12 o'clock. Let's get started. What are we waiting for? Good. I say good afternoon because I am on the East Coast. My name is Jim Cagnina, Senior Education and Training Specialist for the NinjaTrader platform. Today's event, top 5 indicators for new traders. Possibly the last time we do this one. I'm not sure, but it will be recorded on our YouTube channel for further reference should you be interested in that on the NinjaTrader YouTube channel. I do want to remind everybody that trading futures, options, and futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have a high combination of leverage and volatility, although that could be an equation for opportunity, also an equation for risk. So be careful. Only fund your futures trading account with risk capital. Everyone's unique and different. We understand that. But my personal definition, money I could afford to lose doesn't change my lifestyle, doesn't lengthen my retirement horizon, and doesn't overly stress me out. So those are my 3 highlights. Yours might be different, but keep a focus on that. Easy on the day trade margins. We are going to be logged into a simulated live account in the NinjaTrader trading software and with a real-time and data feed. We have Diego from Italy. Awesome. What part of Italy, Diego? Maria from Toronto, Canada. Very awesome. Okay, so our objective here, we're gonna go over the top 5 indicators. This is the way I see them, and we're going to what you're seeing right now is a NinjaTrader trading platform, and it might look, if you're brand new to future trading, this might look a little complicated. It's not. It's really simple. Control panel here, modular. You could open and close as many windows as you want. Trading ladder on the right. Quote board on the far right, a little chart hidden down here on the bottom, and then our main chart here in the middle. And we're gonna recreate this main chart as our from scratch. We're gonna start from scratch, and this is where we're gonna end up, and then we'll talk about maybe a trade idea or two if we have time. Diego is from Rome. Awesome. Was there right before COVID. Had a great time. Fantastic place to visit if you haven't been there. All right, I'm gonna go to new. I'm gonna create a brand new chart for sure. Futures trader GA from PA. We're going to pick a market. I'm going to pick an E-mini S&P market. ES, this is the stock index futures market. This is probably one of the most popular markets there are for trading futures. Very liquid, a lot of price action. I'm going to create this candle chart, just a candlestick chart. I'm going to create a 10-minute chart. There's all sorts of kind of chart. You can do a daily chart, a weekly chart, a second chart. Range charts, volume charts, tick. I'm going to keep it simple. I want a 10-minute candle chart. That's all I want. I'm going to hit OK, and it's going to open it up here, and I'm going to expand it. Okay, so this is a 10-minute candle chart, and you can see the candles here, right? They're color coded, right? Green candles are represent when the market goes up. Red candles represent when the market goes down, and we'll get into a little bit more detail right now on that. That's how, the standard color coding. This isn't unique for any reason. And what you see here is there's really 4 data points, right? There's a body in the middle, which represents the difference between what the price was at the opening of that 10-minute period, right? Each one of these bars represents 10-minute periods. And then you see a closing price where the price closed in that 10-minute period, and in the middle is the body, right? It's filled out in the middle. And then you'll see a wick, oftentimes at the top, and a wick, oftentimes at the bottom. Some people refer to it as shadows, but what the wick demonstrates is the highest price that the market traded during that 10-period increment, or the lowest price at the bottom where this market traded in the 10-period increment, right? And so when the body opens lower and closes higher, you get a green candle. When the body opens higher and closes lower, you get a red candle. Real simple, and it really is a lot. It's just basically an open, high, low, close chart filled in, right? It's an open, high, low, close chart filled in. So the little hash marks here, if you drew a bigger body between the 2 hash marks, then that's what it would be. So it's not any different than that, but it's a graphical representation and gives us a good idea of what we're looking at. Okay, so that's what I'm starting with. Most of you are already familiar with that. I know, but we're gonna keep it. We're gonna keep it simple. And over the course of my decades of doing this, I went from complicated to simple. We're gonna end up with really a simple layout with some simple, relatively simple indicators that'll give us some trade ideas, some areas of interest. So first thing I'm gonna do is I'm gonna add a simple moving average. And I think I have the equation here. It's really simple, right? Instead of you could add an exponential moving average, a triple moving average, Wells Wilder, Holes. There's all sorts of different kinds of moving averages, but I'm going to keep it simple. Simple, and the equation is, we're just going to add up the periods, and we're going to divide by the number of periods to get our moving average. So let's go ahead and do that. I'm going to right-click. Everything's right-click in NinjaTrader, really easy to do. Click on indicators. It's going to give me this kind of indicator box up here. And then I'm going to look for simple moving average. And it's abbreviated SMA. Okay, so SMA right there. I'm going to highlight it. You could either double-click, or you can go all the way to the bottom and click on this add in the configured section, the bottom configured section. And I'll go ahead and click on that add, and that'll give us that. Okay, so here's my first one, my first moving average, and I'm going to add it to the chart, and I'm going to make it a 26-period moving average, right? So it'll calculate the close prices on 25 previous candles, and then the 26th candle is the candle that's active, that's live right now, right? That's moving around right now, and I'm going to calculate that on each tick, right? So it'll keep up as the market moves. It'll keep changing. And we're going to color code this one a little differently so we could see it a little better. Since this is the fast one, we're going to probably, well, we're not going to probably, we're going to color code it a darker color. And let's just pick, let's see, I'm going to scroll down here. Where is my color options? Here we go. We'll do Dodger blue. How about that? I'm going to hit apply for you Los Angeles fans, Dodger blue. There it is. So this kind of, you can see it's kind of a relatively smooth curve, and it oscillates up and down as more data is generated, right? And so as when this bar closes and the next bar opens up, then it'll continue on calculating 25 prices backward plus the latest traded price for 26. That's my slow moving average. So the second thing I want to do is I want to add a fast moving average, right? And I'm going to right click and I'm going to do that. Good morning from Cagnina, Canada. Thanks for coming today. I'm going to go ahead and add what's another moving average, and I'm going to overlay it on the chart. We'll see them both. So I'm going to go again to available indicators, and I'm going to go to SMA, double click on that. It's going to add it down here, and the default's 14, but I'm going to change it to 6. So when I say fast moving average, it means that the value of the moving average is going to change quicker on a 6 period than a 26 because there's less data to average. That's all. There's less data to average. So it's going to change faster. And I'm going to make this one red for now. And I have a method to my madness here. And I change the calculate to on each tick. I'm going to hit apply and OK. And you can see that red kind of, it's more choppy, right? Because again, there's less data points to determine the actual value of the moving average as it moves forward here. And you can see, so by putting 2 of them on the chart, developing what's called a moving average cross, okay? Now, it's a little cluttered here. It's hard to see. So I'm going to move this moving average cross to the bottom. I'm going to create a new panel here. I'm going to right click again. And I could have done this when I set it up, the first time to make it quicker, but I wanted just to show you what it would look like on a chart itself. So I'm going to go down to the configured area here, and I'm going to select the first one, the 26 period moving average. And then I'm going to go to panel, and I'm going to create a new panel. The first panel, number 1, is what we're seeing on the screen right now. By clicking a new panel, it's going to move that blue line to the bottom. Hit apply and OK, and it moves it down here. So I moved the 26 down here. It's created a second panel, panel 1, now panel 2. I'm going to do the same thing with the red. I'm going to right click and I'm going to go to my indicators again. I'm going to pick my fast moving average, and then I'm going to go to the panel again. Instead of clicking new, we see that there's a 2 here, right? The software smart, it sees that we created the second panel, and I'm going to click 2 and hit OK. So now I've moved this moving average cross down below, so it doesn't clutter my charts up. And this is my preference. You don't have to do that. You could kind of, format it however you'd like to format it. So how do I use this? What does this mean, right? So when the fast moving average moves quicker than the slow moving average, that means prices are on the move, right? So when the fast moving average is diverging from the slow moving average, it's a lagging indicator, keep that in mind. That's suggesting that there's a positive influence on price, and price is appreciating. The same is true when the fast moving average then converges with the slow moving average, right? When the red gets closer to the blue, this gap between the two gets smaller, and then it's suggesting that prices are now going down, right? In this particular case, right? Since we're high to low. And then the last thing we look at is the moving average cross, right? When it actually crosses, that could be a signal for some folks, right? We could say, okay, this moving the fast is crossing under the slow, therefore that's a signal perhaps to go short, to sell a contract here. Now, it's not an answer to do we buy or sell. It provides us with a point of an area of interest. It provides us with data to consider. Right? So moving average crosses. So when we cross fast above the slow, that suggests maybe prices are appreciating. When we cross below, maybe it suggests prices are going down, negative, right? Are getting smaller. Now, again, even on the downside, you're going to see a convergence between the fast and the slow, and that's going to suggest continued momentum in that direction. So that's how we use it. And then, once we build this whole chart book, then this whole workspace, then we'll kind of try to put it all together. But just to recap, I'm looking for crosses below or crosses under. and I'm looking for divergence or convergence between the two lines. So those are the two things we're looking for right now. So I'm going to go ahead and just kind of put that back. That's kind of number one, right? Number one. Any questions on that, type them in. The next thing I'm going to add on here is called an oscillator, right? And there's all sorts of oscillators to choose from. Again, in the indicator section, I'm going to right click on my chart. I'm going to see all the available indicators on here, and there's a lot of them. There's the Arun oscillator right at the top, as a matter of fact. There's the CCI, the Chaikin oscillator, MACD, RSI, Trix is another one. And, you know, so I'm going to pick one that I like, but that doesn't suggest it's the best one or the only one. It's just the one I'm used to, and it's called the Commodity Channel Index. It's CCI. Double click there to add it. And then I'm going to go ahead and make some modifications to the properties by selecting the CCI in the configured section, and in the properties section, it becomes activated, and I'm going to change the period to 20. This is my personal preference. You could change it to what you want and experiment with it. I'd encourage you to experiment with it. Calculate on each tick. I'm going to go down to my colors. I'm going to leave all the rest of this stuff alone. And I'm going to make one change, which seems to be popular with people. And I'm going to change well, I'm going to leave it at a line right now. I'm going to leave it at a line right now. Hang on a sec. I'll come back and make an inline correction. I am going to color code the 0 line. And then we're going to hit apply and OK. And it adds its own panel, right? So panel 1, we have the candle. Panel 2, we have the moving average cross. And panel 3, we have this CCI, this oscillator. And you can see it's oscillating around this 0 line, right? This red line. That's kind of, and let me just show you the equation right here real quickly. I mean, it might be a little bit too much in the weeds, but you know, this is a trend indicator, right? And it's going between a high and a low band. It measures overbought and oversold. We'll talk more about that in a second. Whereas 100 is overbought, minus 100 is oversold. And the equation is there. You might not be necessary to memorize it, but that's what the equation is. So all of these different kinds of oscillators have different equations that somebody came up with to kind of develop an idea on momentum, right? And this is just this particular one where, you know, you take the typical price, which is the high plus the low plus the close divided by 3 of a candle, and then you minus the 20-period simple moving average of that typical price. That's on the numerator. And on the denominator, there's a 0.015 constant times the mean deviation. That's the equation. And for some reason, this is kind of a popular oscillator, and some people think it provides good information. Again, it's a lagging indicator also. Okay, so that's down here on the bottom. Now, I am going to make a change to make it a little bit easier to see, maybe, than we're looking at it right now. I'm going to go back to the indicator section there, and I'm going to click on this, and I'm going to click on CCI. On the CCI plot area at the bottom, I'm going to change plot style from line to bar, and I'm going to change the width to 7. And so line to bar, 7, apply, and OK. And now it's giving us something maybe we're more familiar looking at, right? We see the histogram bars instead of the line itself. And then the idea is to kind of look at what's happening with those histogram bars as price goes forward. Now, today's a weird day because it's, you know, the Fed announcement day, right? The Federal Open Market Committee is going to come out with an announcement at 2 o'clock Eastern time, and then they're going to wheel out Chairman Powell at 2:30, and he's going to give a speech and take questions. So today's a little bit of a wonky day with respect to price action, but that's okay. It's still good for our purposes here today. Now, same thing I like to look for here on the CCI as I do in the moving average cross, and that's when we cross over areas of interest, right? So 100, the minus 100, in the 0 line, right? So when we cross either below those quickly or above those areas quickly, it gives me an idea of momentum. And I'm less interested in the idea of overbought and oversold, only because it could stay overbought for a long period of time. It could stay oversold for a long period of time, and that's not a signal amongst itself. I mean, for instance, right here on this particular candle where I have my crosshairs, hey, this market is overbought, it's time to go short. Well, you would have taken about 20 minutes of heat if you were day trading, and maybe even longer for that reality to come true. So, be careful with that idea of overbought and oversold. But when we look at a cross here, let's look at how we crossed, below the zero line. Right here. And this was a good, again, lagging indicator, but, by the time it did cross underneath the zero line, you could see the momentum of the market was negative, right? So that gives us another area of interest, right? And when, lastly, when we see the, a moving average cross and that's in sync with an oscillator crossing over and under either the zero line, 100 or minus 100, then that kind of reinforces the area of interest in my mind. So that's kind of second. Any questions on that? Let me know. Type them in. Say hello. I think we're all good. Okay, this is number two. The third thing I'm going to add to the chart, and this is really where kind of the rubber meets the road on futures trading, because we're trading a market that's traded at one place, right? At a regulated exchange, at the CME group through the Globex electronic marketplace. Trades are matched on a first come, first served basis. The whole process is transparent. A trader in Japan sees the same thing. A trader in France sees the same thing. A trader in Venezuela sees, or in Seattle, or Toronto, or if I missed your country, I apologize. But in Italy, but it's you see the same thing. There's not an over-the-counter differential between markets, right? So what I'm going to add is I'm going to track volume that happens throughout the day. And I'm going to go back to my indicators, and I'm going to add volume profile. And volume profile will be found in the order flow volume profile here. I'm going to double click on that. And we're going to add it to the chart. Down here, I'm going to highlight it, and I'm going to look at the properties here. And again, calculate on each tick. And I'm going to leave pretty much everything alone except a couple things. I'm going to change the tick size to 2, and we'll take a look at what that means in a second. And then everything else I'm going to keep low. I'm going to scroll all the way down to the bottom here, and I'm going to click this Show Volume Labels. Click on Show Volume Labels. And I'm going to hit Apply, and I'm going to hit OK. Okay, so what happened? We have a I don't know, a sideways histogram bars that are showing up here on our chart itself. And what this is doing is it's tracking volume that I started the volume profile. It's tracking volume from when the market opened up last night, 23-hour E-mini S&P stock index future market. It goes 23 hours in a row. So I want to see all the volume that happened at all the different prices throughout the day. And this is what it's showing me here. So each histogram bar is 2 ticks high. Remember I said I'm going to set this to 2. So what it's saying is, where my crosshairs is an example. Hey, in these 2 ticks, or these 2 price increments, tick is the smallest price increment. The market is the volume traded is 25,856. That's how many contracts traded. And you could see here this particular bar, it's moving around, right? 34,629. That's trading as we speak, right? This histogram bar is getting longer as we speak. And since it's 34,756, so you really can't see it getting longer. It's hard to see visually it's getting longer, but it is. And as over time, these distributions develop. This volume profile distribution develops. So everybody with me so far? Okay, so the dark blue area here is 1 standard deviation worth of volume. That's called the value area. The light blue above the value area is called, and you guessed it, prices above value. I don't know who named that. And then the light blue below is prices below value, right? So, and this is really a nice kind of bell-shaped distribution. It's a normal distribution. Sometimes the distribution skewed up, sometimes the distribution skewed down, sometimes there's a double distribution, in other words, two areas, like a B or a sideways W, with a depression in the middle. That demonstrates a different kind of pattern, and traders get ideas out of these different kind of patterns. So the gold bar here, that's just the longest That's where the most volume traded, right? There's nothing magical. There's no magical formula associated with it. It's just that 49,792 contracts traded at those two price increments, and it's called the point of control. It's the longest histogram bar with the most volume. And you can see the one above it is starting to challenge it, right? Starting to challenge it. There's, trades are happening right now, and it could be that this point of control shifts to that price, right? It could shift to that price. There it goes. We just shifted upward. We saw it happen right before our eyes. So why is this important? This gives us three areas of interest on our chart. The area of interest, the first area of interest is the transition between, and I'm going to change this to make it even better. Hang on one second. I'm going to go to 1 tick instead of 2 ticks, just in case anyone's having trouble following. Order flow volume profile. I'm going to change the ticks per level to 1. So each histogram bar is worth 1 tick or 1 price point, right? 1 price point. Each one of these is 1 tick tall. Okay. So from a point of interest point of view, the first point of interest is the point of control. And I'm just going to draw my hat, put my crosshairs through there, and you could see just about every single candle, except 3 of them, starting at 8:30 to 4, has traded through that point of control. And a normal distribution day, oftentimes, not always, but oftentimes, the point of control acts like a magnet. Prices keep going through it, right? So it gives me an area of interest right now. 46.17 1/4, which is the price, is an area of interest for me. The other area of interest is the top of the value area, right? The transition between the top of the value area, that dark blue area, shaded area, which represents 1 standard deviation, and then the lighter blue, right? So that transition area gives me a second point of interest, 46.19 3/4, and then the transition at the bottom of the value area is the last one. It's 46.16 3/4, and there's a couple different strategies on how to trade off of these levels, right? One strategy is, hey, I want to sell the top of the value area and buy at the bottom of the value area, and then hopefully we get that we capture this natural kind of harmony or oscillation that happens, volatility that happens in price. Alternatively, a trader might say, hey, once we start trading above, once a candle closes above the top of the value area, then I want to buy it because I think we're going to break out up higher. Those kind of ideas could be generated by looking at the volume profile. I prefer to put everything together in one package. We're not quite there yet. We have a couple more things to add, but I'm going to take a breath right now just to see if anybody, Perspectives for Trading LLC, hi. That's a unique username, but thanks for being here. So I just kind of want to see, no questions on volume profile yet. Great. Let's go on to the next number 4. And number 4 isn't really an indicator per se, but I'm going to right click. I'm going to go back to indicators because it's found in our indicator section. And I'm going to put previous, a prior day open high low close, or previous day open high low close. We call it prior day open high low close on the chart. I'm going to highlight it. I'm just going to take a look. I want to show yesterday's close. I want to show yesterday's high. I want to show yesterday's low. I don't care about yesterday's open. I'm going to uncheck that box. I'm just going to look down at the color codes here. All the rest of the stuff is good. So here's our color coding. We have the high is going to be green, the low is red. That makes sense. And then the prior day close is going to be purple. I'm going to hit apply and OK. Now, the only thing we see today is the purple line, right? Yesterday's close. And again, area of interest. That's an interesting point, right? This interesting area, because when traders think in terms of up days and down days, and are we going to close up? Are we going to close down? And oftentimes that area, if it was happiness yesterday, at the end of the day, maybe it could be price happiness again today. So again, it's an area of interest. Maybe you would say, hey, the trend is reversing now on a long-term basis. So, I don't expect us to get up there. So that's where I'm going to place my stop loss if I go short. So those are other types of trade ideas you can get from that. Johnny says, what's the easiest market to trade, CL or ES? Neither. Neither's easy. This is tricky business. But what I will say to that question, Johnny, is they're two fundamentally different markets, right? Crude oil is a supply market, right? I mean, it's a supply and demand market for sure, and it's a commodity, but it's controlled by production, and whether you're talking about OPEC plus, or you're talking about fracking, or you're talking about just pipelines from Canada and all these things. That's kind of a discipline, an area of discipline. You need to be on your game. You need to know the stats. You need to know what's going down. For the stock index futures, this is the S&P 500, right? This is large cap stocks we're looking at, an index of large cap stocks we're looking at in the futures market. And that could, yeah, energy prices are related to that for sure, but this also has a unique set of characteristics related to to price action, right? Interest rates, earnings, all these things are additional things you got to look at on the ES side. So I guess my point is, whichever one you pick, become an expert in that. Generate muscle memory, focus on it, understand the drivers, the price drivers on there. Hello from Ecuador. Thanks for being here. In any event, but nothing. This is not easy, right? This was easy, we'd all be doing this. We would be at a beach in Ecuador with our friend Zanfer, hanging out, having drinking a margarita. So there are beaches in Ecuador, right? I'm just joking. Anyway, all right, let's keep moving on. So now I have number 4 on here, and the purple line here is important to me right now. I'm going to add number 5. Number 5 is called the Fibonacci retracement. And the Fibonacci retracement is a tool used by traders to kind of, again, find areas of interest for market action. I'm going to go to my tools this time. This is a little pencil up here. You see a little pencil or pen, whatever you want to call it, on the top of the chart. Is going to give me this menu, and I'm going to pick Fibonacci. There's no R in it. It's Fibonacci retracement. So I'm going to click once, and then I'm going to pick a swing high to a swing low, or a swing low to a swing high, to add it to the chart. In this particular case, I want to pick a swing high, A to B, and I'm just going to click my mouse once. I'm going to drag it down, and I'm going to click my mouse again. Now, this is going to give me what's called a Fibonacci retracement, and the idea is exactly what it sounds like. It's picking a trend, looking for it to retrace to certain levels, and making decisions on buying or selling based on that retracement. The numbers here are based on the Fibonacci sequence. If you remember from your high school math, the sequence is you take 0 and 1, you add them together, you get a 1. Now you take that 1 and you add it to the previous number, which was a 1, and you get a 2. You take that 2, you add it to a previous number, which was a 1, you get a 3, right? 3 plus 2 is 5. 5 plus 3 is 8. 8 plus 5 is 13, and so on and so forth forever, right? That's the sequence. And then when you start dividing these numbers amongst each other, and this is based on, the golden rectangle, you start getting these percentages that repeat themselves all the time: 38.2, 61.8, 23.5, 161.8. So as you divide these numbers together, they just keep magically coming up with these ratios, the golden ratios. And so some trader at some point in the past decided to try to apply this to a trading chart, and it's kind of developed a a force of its own power kind of thing, and it's oftentimes, for some reason, as strange as it sounds, very effective. It's almost a self-fulfilling prophecy sometimes. So many traders use the Fibonacci retracement. 50% is not a real fib number, but it's thrown in for symmetry, and it's kind of become an adopted level that's kind of important in the markets as well. So that's kind of that's the fifth piece of the puzzle, right? So moving average crosses 1, oscillator 2, and again, your oscillator could be anything. It could be an RSI, it could be the tricks, it could be MACD, whatever the one you like the best is. Become an expert at it. That's what I say. I just like the CCI. I'm used to it. I'm familiar with it. So that's 2. Number 3, yesterday's open, high, low, close. Number 4, the volume profile. And then number 5 is a Fibonacci look. And so, how would you use all this stuff together? And in conjunction with your fundamental analysis, right? We've already done our fundamental analysis before we even started, right? We know there's a Fed meeting today. We knew that there was some economic releases earlier today. We know what the results of those economic releases were. We've identified the price action to see if those economic releases triggered a paradigm shift in the marketplace. Well, today it didn't, for obvious reasons, because we're waiting in eager anticipation for the Federal Reserve Board, Federal Open Market Committee to say something or do something or do nothing. I don't know, whatever they're going to do. So we've already done that. And, we've established our bias in this market, and, my bias is bullish, right? I think that this market's in a bull market right now, and I've identified that from my daily chart, and I'll show you what I mean by that. Oops, let's kind of just open up a daily chart really quick. And I'm going to toggle back over to an ES chart maybe. And here's my daily chart, right? So each one of these candles now aren't, they don't represent 10 minutes anymore. They represent a day. Right. And I'm just kind of looking, and this is just casually looking at the trend up, all these green candles up. And, I don't know about you, but I don't think it takes a rocket scientist to see that we're in a bullish market. Bullish meaning prices are, the pressure on prices is upward, right? It's not downward. If it was downward, it would be bearish, right? So one might say in this area here, we were bearish, right? And, I could even draw a line there just to kind of, here to here, that suggests that that's, at any given time. And here you could say, yeah, we're in a bearish market. Here, we're in a bullish market, right? I expect prices to continue to appreciate until the candle chart tells me something otherwise. The other thing of importance here is I have my 50-period moving average on here. And the 50, and this is a daily, right? A daily, since it's a 50 period, but since the period we're looking at is a day, 50 period, and you can see it's literally diverging from the price of the market. Again, another bullish kind of idea. The CCI at the bottom here is at 101 right now. It's very positive. It's very strong. I wouldn't say the market's overbought by any sense of the imagination at this point. But it does show it's kind of strong, and it's been kind of constant for the last several days, right? CCI the momentum hasn't been so great as to jack the CCI up to plus 200, or so weak as to make it negative. It's been constant, and you can see kind of that constant crawl up here in the market. Lastly, my moving average cross is kind of going parallel right now. It's hard to kind of look unless you really expand it, and you could say, yeah, it's kind of going parallel, which is also consistent with what we're seeing on the chart. Lastly, I have the previous high up here. I drew it all the way across, and a lot of times previous highs, it shows us areas of resistance, right? And then by drawing this line across, what I'm looking at is a lot of times resistance becomes support. So this is my new support line. It's very far away, but I'm looking at a daily chart. It's 78 points away, or 78 handles away. Points and handles are the same kind of thing. So I'm bullish. I'm looking for places to buy right now. And I'm going to go ahead and minimize that, and we'll open up our main chart that we just built. And having said that, since my bias is bullish, now I want to find areas of interest to consider maybe trying to, go long a contract. And, my very first area that I see is interesting is the bottom of the value area, and then the 23.8% retracement area, right? So what, maybe one idea would be somewhere in the middle, split the difference a little bit. Oops, let's see, make sure I have my chart trader on. Chart trader. I got to pick an account. I'll do that. Now I'm going to hide the chart trader. It'll still work. I'm just going to hide it because I'm just going to use my mouse to right click at my price, and I'm going to send an order to the exchange. Now, CCI is, 79. It's okay. Moving average cross is moving up. And so this target's pretty far away, right? It's pretty far away. My indicators are suggesting some upward movement. I see that yesterday's close here is within reach. So maybe I want to be more aggressive, right? Maybe I'd like to be more aggressive and say, you know what? If the market gets back to the point of control, which is totally reasonable, then I would like to buy a contract because I feel like things are going. Keep this in mind. I'm just throwing out some trade ideas. But today is a little bit unique because at 2 o'clock, there's going to be that announcement. And a lot of times on a Fed day, the market doesn't deviate too far from the point of control. So this would be very aggressive kind of trade idea right now. But if it was a regular day, I would say it's a reasonable trade idea right now. And a conservative, again, would be, waiting to get down here. Now, on the flip side of the coin, let's say the trader is like, hey, I'm interested in maybe going short here because I want to see the market kind of revert back down to that point of control, even though my moving average cross is crossing upward, and even though the CCI is still slightly positive. So a trader might say, we get to the 61.8 retracement level, which corresponds really nicely to the top of the value area at 46.19. Then I would like to maybe to sell a contract, right? Sell a contract. If the market comes up there, and then the trader might say, well, okay, where would I put a stop loss? Well, clearly, if we get up to yesterday's close, then all bets are off, and I think I made a mistake, and I'd like to put a stop in there. So then you could just right-click your mouse and put your stop there. So these are just kind of ideas on how to use these particular points of interest in conjunction with your indicators and your game plan. We have Rio de Janeiro, Brazil, another place I'd love to visit, I think. No, I would like to visit, but Daniel's saying hello. Appreciate that. Daniel Fernandez, thanks for being here. All right, so any questions on how I have this set up at all, or how to use any of these particular features, type them in now, and I'll be great. Okay, so here we go. Theo says, hi, I was wondering for scalping, what is the most used tick chart, minute or second chart? Theo, I don't know, because I'm not a fan of scalping. And let me kind of let's talk about what that is for folks who don't know. Scalping is literally trying to buy and sell contracts within a few ticks of each other, in and out quickly, right? When I was back in the day, when I was on the floor of the Chicago Board of Trade, before online trading existed, the traders would try to make one tick, right? And the U.S. Treasury bonds, as an example, one tick is worth $31.25. It's a bigger contract than this E-mini S&P contract. And so they would try to make one tick a whole bunch of times during the day, right? So they would literally buy and sell, buy the bid, sell the offer, buy the bid, sell the offer all day long. And they had an advantage being in the pit at the time with no electronic marketplaces because they could see the order flow coming in from the broker on the top of the pit. So that's my version of scalping. And I know online traders often try to get 1 or 2 or 3 ticks out of the market quickly. But in my experience, it's hard to do. It's hard to do, if not impossible to do. I prefer looking for ranges of trade ideas and give myself some wiggle room and be patient. And it's kind of my preference, as you said, my personal preference. But scalping kind of is a really hard thing to do, even if you're using a tick chart, right? Even if you're using a tick chart, because you have to overcome the bid-ask spread. In this case, the bid-ask spread is $12.50, and let's assume you have a commission. I don't know what it's going to be, but let's just say it's $4 or something like that, $5 or something like that. So you're at $17 to start, right? And you want to then, which means you have to now get 2 ticks to break that for it to be a winner. So it's really hard to do. And now you're competing with automated trading systems, right? So you're competing with algo systems and trading systems and things that are automated that go super fast, right? Measured in milliseconds. And it's really difficult to compete that way. So for what we do on our Tuesday and Wednesday live S&P trading events, and next week it'll be Tuesday, Wednesday, and Thursday, is we use the setup that I have on my screen and we try to find some good trade setups from 10 o'clock to 11 o'clock East Coast time. And then get into detail about philosophies and scalping versus position trading versus day trading for 4, 8, 12, 16 ticks instead of 1 or 2. Sorry, I went kind of overboard on that a little bit, but Theo, it's just really hard to do manually the way we're doing this. So right now, all right, so our target was hit. It's 61.80. And again, I'm in a simulated account, guys. This is a sim account. My unrealized P&L here is $37.50. What that means is if we liquidate our position now, that would be our gross P&L. Now it's $50, and it kind of moves around as the market moves around. I'm going to freeze the trading ladder, and you'll see the red area here is the last traded price. The brown is where we're short from. We sold up here at 1975. Each one of these price increments is called a tick, and it's worth $12.50 each per contract. And if you do 4 of these, so you do a whole point, then that is worth $50, 12 times 4. The label here on the chart, everything is in sync between the trading ladder and the chart. Shows us it's red, meaning we're short. If we were long, it would be green. The 1 there means we have 1 contract on. And the price is that 1.0 means we're up one point or 4 ticks. Daniel says, I was in a scalping course. It is really difficult to manage your risk and commissions are very high. I'm giving up on being a scalper, trying to do slower, longer trades. And I applaud that. I think that's a good point of view. I think that's a good mindset. Throw in a little bit of patience there. I think that's a good path to be on. Theo, yeah, no worries. Now, I mean, the obvious appeal is the suggestion that that day traders like me and you could fall into this space between the long-term position traders and hedge funds that are just establishing positions for the long run and the automated trading scalping folks. And there's that space in between the two where a lot of us try to exploit and take advantage of. Okay. Future Trader, this is the order flow volume profile version of the software. There's a free version and there's a couple other versions, but that's the version I'm using to get that, the volume profile. I think it's really important you get that. My opinion. In any event, any other questions? Anything else to think about here? We could touch on margining. I think it's another thing. For most futures brokers are going to offer you a $500 day trade margin for the E-mini S&P. And if you look at your cash value and then you put 1 contract on, you're not borrowing money from a broker, right? This is money that's already in your account. And your excess margin then is just going to be your cash value minus your intraday, plus or minus your P&L. And it's going to move around in real time, but it tells you how much buying power you have, right? How much buying power. If I put a second contract on, then this 500 would turn into $1,000, right? I've used $1,000 of my available margin, and my excess would still be pretty good here. This initial margin is if I wanted to hold this position overnight, and oddly as it sounds, overnight is from 4 to 5 o'clock Chicago time, or 5 to 6 o'clock East Coast time. It's 1 hour long. It's kind of the nature of how online trading, the electronic markets evolved. But this is a CME number set in stone. Can't waive it. Nobody could waive it. And that's for really, most day traders don't worry about that because they're going to be flat at the end of the day, or you're not going to have a position at the end of the day, and then they'll try again either in the evening or the next day. Great question, Michael. All right, so on the volume profile, he's saying, hey, when you trade in the E-mini micro, would you consider only watching the ES cumulative delta, or would you watch the MES cumulative delta? I would watch the one with the most volume, right? So, and my answer is different between stock index futures. I would look at the ES. Just take a look at my quote board. ES here has 438,000 contracts traded, whereas the micro only has 312,000. Better volume in the ES. These prices are in unison. But because there's better volume here, it gives me better information. The opposite is true for the micro NASDAQ. The micro NASDAQ has 467,000, whereas the classic E-mini NASDAQ only has 237,000. I would look for the volume to make that decision. And you could even use that chart and trade on the dome, the micro versus the big one. It's pricing is the same. right? It's arbed really tightly. It might be out of whack for a second or two by a tick or so, but it comes back in line. Daniel, thank you for that. Appreciate that. So Michael, hopefully that answers your question about that. I always like to gravitate toward the market with the most volume. And that gives me a better idea because there's more participants, right? There's more traders and there's more reflection on the on areas of interest and stuff like that. And so our trade idea now is kind of struggling, right? We're up, almost 2 handles, which is about $100. Now it's a little less. And if I'm looking at my moving average cross, it's the fast is it looks like it's diverging from the slow, not good for our trade idea. CCI is kind of just holding its own. So it's not really giving it, the slope is downward here, which is good for our trend idea. And when I mean slope, let's take a look at it differently so we could see it a little bit better. CCI, and this is really why I kind of prefer the line instead of the solid. I'm sorry, instead of the bar. I'm just going back to line. I'm going to make this a 1 again. We'll make it a 2. Apply and OK. And so, I like to look at slopes. The steeper the slope on the CCI, the more momentum, the faster it's moving. And this would be a really good indicator. If you started here when we were over 250, and then you went a couple of candles, and then you just looked at the slope right there, that was a good indicator. And then just kind of looking above here at the moving average crosses, we see a continuation on that divergence between the red and the blue, even up to here, and then we crossed under. So these two things in combination gave us a good sense that the market was going down early this morning. Again, not the magic answer, but some information in our arsenal. Here we kind of have a conflict. We have, the moving average cross is diverging, and here we have the CCI slope going down with a little bit of a hiccup and now going back down again, suggesting downward motion again. So a little bit of conflict, and you're going to get that a lot. Don't let it worry you. We're using the rest of the science here to determine what's going on. We're about 2 ticks from our profit target. Remember, our old end, the point of control is now our profit target, right? So the point of control is now our profit target. Okay, anything else? Any other questions, ideas, hopes, loves, dreams? Type them in. Hit that thumbs up button on YouTube, folks. Appreciate it. Greatly appreciate it. I got a thumbs down. Who gave me a thumbs down? Man, oh man, I got to up my game. We don't like thumbs down. Anyway, we have a whole different, I think we have a whole different set of events next week. But tomorrow, we do have a Futures Trading 101 event. So if you're brand new to futures, come to that, because we're going to talk about bid-ask spreads. We're going to talk about volume. We're going to talk about how orders are handled. We're going to talk about all the benefits, in my humble opinion, that you get when you trade futures over other types of markets, like over-the-counter markets or equity options, and those kind of things. And I'm going to kind of show some examples and give my ideas. So thank you for typing that into the Isabella, thank you for typing that into the chat. There's a link for that event if you haven't already signed up for it. And we're going to get it into the YouTube really quickly here in a second, and Facebook, so you guys can see that link. All right, awesome. Thanks, Isabella. And so we're going to describe, why this market could trade, as an example, at 46.17 in a quarter, and we got a fill, but not give us a fill. We did get a fill. All right, so that was a successful trade idea, and we used our areas of interest to come up with that. I'm going to go ahead and cancel this stop. We don't need it anymore. And I missed something. Oh, yeah, no, okay. Michael, I think we covered that one. Thank you, Perspectives. Appreciate that. Any other last second things to throw in here? I do want to remind everybody, remember, trading futures options on futures involves substantial risk of loss, not suitable for all traders and investors. Oftentimes in futures trading, you have this high combination of leverage and volatility. Although it can be an equation for opportunity, also an equation for risk. So be careful. Only fund your future trading account with risk capital. And I believe coming up here in about an hour and 8 minutes, we should have a little bit more price action. My guess is we're going to have some more volatility toward the close as soon as the FOMC is done doing whatever they're doing today. All right. Having said, thank you. Hope to see you next time. Please feel free to invite anybody you want. These events are free. I'm open to any questions you have. Even if I don't know the answers, I will look them up and give them to you the next time I am live here. Having said all that, I do want, again, thanks for coming. And I would just want to leave you with this. Be safe out there and be good to each other. Take care.